Inman one's a little more realtor driven,
Yeah,
realtor
yeah.
thought through.
I mean,
So
the only point on that one was just kind of the prediction of interest rates and where they might go was for me kind of like, that's it. But anyway, so here we are. This is therealdeal.com. This is an industry website that a lot of brokers and realtors look at, developers, people in the real estate industry. And the article here reads August home sales rose 8% in SoCal despite summer slowdown. Sales last month were still down. Sales last month were still down 28% year over year. So let's get into this real quick.
I feel like a broken record, but that's on volume. 28% down on volume of sales.
Good
Yeah.
point. Good point. Okay, hold on. Here we are. We're getting there. All right. Despite a summer cooling trend in Southern California's housing market, home sales ticked up nearly 8% in August thanks to a 1 month dip in mortgage rates. Home prices and sales, which had been dropping for the previous several months, leveled off or increased last month, the Orange County Register reported. The reprieve could be short lived as inflation, Federal Reserve rate hikes, and a rebound in home loan borrowing costs push sales and home prices lower in the months ahead. Bidding wars remain scarce. Buyers are sidelined by a 47% jump in the typical house payment, and discouraged owners are shying away from the market as homes take longer and longer to sell. The train kind of left the station as far as overbidding on properties. Gail Anderson, an agent with iNet Realty in Irvine, told the Register. For $750,000 properties, we were getting offers close to $900,000. That's not happening anymore. There's no longer multiple offers. He added, no more lines at open houses. The 6 county Southern California region had 17,698 home sales in August, up 7.9% from July, according to CoreLogic numbers released by DQ News. The median price of a Southern California home, or the price at the midpoint of all sales, was $740,000, unchanged from July. That's a turnaround from previous month-to-month declines after 30-year mortgage rates dipped to 5% in July and early August. Nonetheless, last month's sales still were down 28% year over year, dropping to the second worst tally for an August in records dating back 34 years. It was the smallest number of sales for an August since 1992. The region median home price, meanwhile, was up a mere 8.8% from a year ago, tied for the smallest appreciation rate since the pandemic lockdowns all but halted sales in the spring of 2020. Southern California home values had been rising an average of 15% for the previous 2 years. Lofty home values, coupled with a near doubling of the 30-year fixed mortgage rate, boosted the typical payment on a median-priced home by $1,055 a month. The typical Southern California home took at least 38 days to sell in August, or about a week to 12 days longer than in the summer of 2021, Redfin figures show. Sales listings, meanwhile, are up dramatically from the start of the year. As of August, the number of homes for sale in Los Angeles, Orange, Riverside, and San Bernardino counties had jumped to 28,286 listings, up 61% from December, according to Redfin. Homes are taking longer to sell, and fewer owners are putting their properties on the market. New listings dropped 30% from a year ago to just under 13,000 in August. And back to yesterday's news, I guess, Darren, just go ahead and explain what happened yesterday, because that kind of sets the context as well.
sure. Well, the Fed funds rate was adjusted up by 3/4 of a point, as expected. There was a possibility that it would have even been 1 point. There was some speculation around that, but the harsh tone still from the Fed is often
Mm-hmm.
what matters. Meaning that they put out this 3/4 and they're like, we're not stopping until we cut inflation. The most important thing is for us to stop inflation from rising and continuing to persist. So, we'll see what the next inflation numbers are. But I believe the rates were moving up as we approached the date in anticipation of the increase. But it's really the language after that will say will continue to be aggressive that is
Right.
ultimately going to continue to push the rates up beyond, because on the last
Hmm.
increase,
Yeah.
the language was, hey, I think we're getting this under control. And
Right.
ironically, they moved it up in interest rate, 30-year interest mortgage rates dropped. But I don't think that's going to happen this go round. I think they're going to stay up.
Yeah. Yeah. Right. Yeah. It's not just about that day, yesterday, but it's setting the tone, right? 3 in a row, 0.75 basis points up. I think that's a record, a recent
Oh, it
record.
is. With a
Right.
half point, I believe it was a half point before that, even.
Right. Right.
So,
And right. A total of so far 5 hikes in this year. But
yeah.
yeah, it's about projecting into next year and beyond. And I believe there are a couple more announcements November, December, I think even October.
There's going to be more downward pressure on the market.
Yeah.
There isn't a lot of hope in the near future for this to turn around.
Right.
It's the bottom line is, I'd like to call it just it's a balanced market
Yeah.
again. I don't know
Yeah.
that it's a buyer's market. Certainly, buyers feel empowered because they've had almost no power.
Right.
They've been powerless. They've been
Right. Anything is a plus.
submissive to sellers
Right.
for a very long time. So they have to
Hmm.
feel empowered
Yeah.
with what's going on.
Yeah.
But ultimately, it's a balanced market at the moment. It certainly has
Right.
not flipped.
Right.
Um,
And that's what I keep hearing, right? The recurring theme of, hey, it's tough medicine now, but it would be far tougher medicine later. These are the steps that need to be taken.
yeah, yeah.
It's hard to accept it when you're a buyer and you're sitting in this moment. But overall, as you're saying, this is an effort towards a balanced market.
Absolutely. And there's historically, it's easy to look back and identify things. You don't hear people saying this, but I believe through many of the Trump years, there was massive the market was artificially inflated
Hmm.
with a lot of pressure on keeping rates low and a lot of tax breaks and a lot of things that put a lot of money into the economy, which overstimulated it. And it made them
Hmm.
set up and say, see, look how great we are. Of course, they're going to force
Yeah.
a rebound from that.
Right.
Um,
Right.
and that's kind of where we're at. And then you add the all the money put out because of the pandemic.
Yeah.
Then it overextended, and inflation has just gone nuts, man. So they
Well,
do have to get it under control.
yeah. So, I wrote down some notes and I invite you to agree or disagree. I'll just throw it out there and you give me your thoughts.
Sure.
So, as I was looking at all this, for buyers, I wrote down if you have the financial ability, buy now with less competition and lower rates. Rates are not easing, but buyers, as you just said, have more leverage now in negotiation. So that's the take I felt for buyers. What
They
adjustments
do.
would you make on that?
Well, they it's a more balanced game. So
Hmm.
in the past, you're so I'll use the example that we were talking about today.
Uh-huh.
We were with preparing for a new listing, and
Yeah.
we said, you know what? Probably for the first time in 10 years,
Yeah.
cash matters.
Mm-hmm.
And I'm not kidding.
Mm-hmm.
Yeah, people would still come to the table. Well, I have cash. Who cares? It
Right.
doesn't matter. People
Right.
can get loans. Why would
Right.
we give any discount because of cash? Well,
Right.
volatility, now loans might fall out. Rates may change in the middle of a transaction. Maybe it's locked in. Maybe their
Yeah.
lenders aren't as strong.
Yeah.
Cash matters. Size of down payment
Yeah.
matters now. It will
Yeah.
have more of an impact on getting an offer accepted.
Very
Um,
true.
and it didn't before.
Mm-hmm.
It was very minimal before. It was just a matter of what contingencies were you going to remove.
Right. Right.
um, so all those things are evolving, and we have to adapt.
Right.
So yes, buyers have some leverage, and they have some opportunity, and there is no expectation that rates will drop soon. If you
Right.
plan on buying, in my opinion, and I always try to limit the
Yeah.
predictability into the future, how far out.
Right.
But if you plan on buying this year, now is as good as any time
Yeah.
that you'll get in interest rates.
Yeah. Yeah. Okay. So for me, I wrote down this note for sellers. You can wait it out, but it may be a while before prices will come back to recent levels. Are you willing to wait? Do you need to move on with your life? Then be reasonable with your price and expectations. Work with your agent. That's what I wrote down. What do you think?
Yeah, we're having more and more of those talks nowadays.
Yeah. And that's the thing. This is such a short statement I made, but yeah, there are whole other stories, individual, personalized, yeah, in terms of what people want to do.
There were elements of one of the challenges I personally had for a while of being a selling agent was really it was who showed up and who was the biggest cheerleader.
I see.
Because you're going to support my price, right? My house looks amazing. Just support me because all these other people are telling me everything I want to hear.
Yeah.
And it was fine. It worked out in their favor because the market was just so much in their corner.
Yeah.
But now there's some harder talks, and the sellers who don't want to participate in those conversations and want to be not pay attention to them, not believe them, could suffer. They could ultimately spend time and money prepping their house, and it won't sell. And it's still, no matter what market you're in, the first impression is the best impression. And the early activity in a listing is the most likely to bring the best price.
Right.
Period. For sellers. Overpricing your market, overpricing your property in a softening market is a mistake.
Right. Okay. And then let's see, I put here for buyers and sellers, find experienced agents that know the market and have a level of success that is not fully based on an up market of the last 10 years plus. Many agents look successful because of the last market. Finding the right agent is more important now more than ever. Interview agents and be tough. Houses are not selling themselves. Purchases are not happening magically.
Right. In the last 2 weeks, I told one seller to maybe he should try selling the house on his own, based on his expectations. And if he sells it, fantastic. But someone was questioning commission in a conversation, and I know the volume of stuff that a more experienced, knowledgeable agent who really does all the front-loaded work in going to market on a listing does.
Yeah.
And it was the same thing. I'm like, no, I'm not going to adjust. I'm going to do too much. It's not worth it. You go ahead and find someone else. I think that's a better match for you. Yeah. So there is going to be work. There's going to be grind. You're going to have to go out and create and evaluate and adapt and do maybe what I think you're better at, Joe, than I am even, and that is pursue every little piece of opportunity. Yeah. Look for that needle in the haystack and just be diligent about it. That will become more important through this market.
Got it. And then finally for me, I just put down for agents, well, you just said it. Find new ways to get the deal done. Work together.
Yeah. There will be new ways. In my experience of the last market shift was certainly there was plenty of technology and inventions. Real estate's always dynamic shifting because there's so much money in the real estate world. Right. Agents spend a lot of money to try to connect with clients, and often that's through technology and various ways. So that absolutely happens in an up market, and in between markets, there's a pause, but then there's another explosion of it. And when it is, if it becomes a down market, because the lingo becomes, well, hey, you need buyers, right? We've got the buyers, or this is how you connect. And there's just always, no matter what the market is, there's technology and shifting in real estate. And being aware, I think a lot of it is garbage. But if there's a few opportunities in there, you have to be able to identify them and pursue them.
Yeah. Yep. Okay. Anything else? Kind of as the end point on this one?
In this article, I thought was I had a couple points, but lost a few of them. I was noticing the 34-year timeline.
Yeah.
That's you're coming out of the so the last time the volume was that low, you're talking about coming out of 17-18% interest rates.
Mm-hmm. Yeah.
That was late 80s.
Yeah.
When the market just fell for many years. We're nowhere near those percentages on interest rates.
Yeah. Like we said, it's hard to keep it all in context because there's numbers, there's your own personal comfort, discomfort about it all. But that really hits it on the head. Yeah.
Yeah.
You should feel fortunate.